Welcome to our podcast, Crypto, Culture, and News. In this episode, Wayne and Victoria will discuss an article from Cointelegraph written by Dave Atlee and published in October 2023, focusing on European regulators and their approach to cryptocurrency.
All right, so decentralized finance, right?
Yeah.
It sounds kind of like something out of like a sci-fi movie,
Yeah, a little bit.
but it's actually a pretty big deal.
Yeah.
And the EU is definitely paying attention.
Mm-hmm.
So in this deep dive, we're going to take a look at a report from the European Securities and Markets Authority, basically the EU's financial watchdog.
Oh, yeah.
And they have some interesting thoughts about DeFi. Some good, some maybe not so good. So let's jump in.
Yeah, let's do it.
Okay, so starting with the good news, right?
Okay.
The ESMA report, they talk about how DeFi could lead to like a more inclusive financial system,
Yeah,
better access for everybody.
definitely. Yeah, and they talk about how that would, hopefully lead to better products, new services, things that we haven't even thought of yet.
Yeah, exactly.
Yeah.
And they also mentioned like faster and cheaper transactions. Think about like sending money overseas, right? It's kind of a pain.
Oh, yeah, definitely.
You got to pay all these fees. It takes forever. But, DeFi, it has the potential to make that like instant.
Instant and way cheaper.
Yeah.
And I think what's really interesting is they seem to be focused on how these benefits could really help people who've been left out of like the traditional financial systems.
Right.
So like maybe giving them access to microloans or investment opportunities. That's where you could see some real positive change, happening for individuals.
Yeah, that would be amazing. But then, it's like the good news, bad news situation, right?
Yeah. Always a little bit of that.
So the ESMA, they also have some concerns. And one of the big ones is like volatility. Crypto, it's famous for being like a roller coaster, right?
Yeah, the price swings can be a bit dramatic.
A bit dramatic.
Yeah.
They compared Bitcoin and Ether to this European stock index, right?
Okay.
And like Bitcoin was 3.6 times more volatile and Ether was even worse, like 4.7 times.
Wow. Yeah, that's significant.
So like imagine your savings just going up and down like that every day.
I mean, some people thrive on that, They enjoy the thrill, but it definitely makes it difficult to plan for the future.
Right, exactly. How do you like budget when you don't know how much money you're going to have next week?
Exactly. It's tough for businesses too,
Yeah.
Trying to manage cash flow when the value of your assets is just all over the place, it adds a whole new layer of complexity.
Totally, yeah. Okay, and then there's the whole smart contract thing, right? On the one hand, smart contracts, they're supposed to like automate stuff, reduce risk, make things more efficient. But the ESMA, they're like, hold on.
Right.
They point out that smart contracts are still just code, and code can have bugs.
Yeah, absolutely. And those bugs can be exploited. We've seen it happen.
So like, how worried should we be about those vulnerabilities? Is it a big deal?
It's definitely something to be aware of. One thing to remember is that while smart contracts try to minimize certain risks, they also introduce new ones. It's like for every problem you solve, you might create a new one.
Yeah.
So, for example, you have something called reentrancy attacks, where somebody can exploit a vulnerability in the code to, like, basically drain the funds repeatedly. So it's not like it's foolproof. It's definitely not.
And I guess that's the problem, right? Because it's so complex,
Mm-hmm. It's this whole new world, a whole new way of doing things.
It's hard to like even wrap your head around sometimes, let alone figure out if it's safe.
And speaking of, like, not safe, the ESMA also brought up scams.
Oh, yeah. Unfortunately, there's always that element, especially
Okay.
when you're dealing with something new and exciting,
Right. And DeFi, it's like the Wild West out there in some ways. There's no, like, central authority, no real rules. And that makes it attractive for some less than honest folks.
Definitely. And the ESMA specifically highlighted how these decentralized exchanges where you can trade crypto without having to go through the normal know your customer checks.
Right.
Well, that kind of anonymity can make it easier for people to get away with shady stuff. Yeah. So what kind of scams are we talking about? Like, what should people be looking out for?
Well, they specifically mentioned something called rug pulls. That's where the developers, they create a project, it looks all legitimate, people invest,
Right.
and then they just disappear with all the money. Poof.
Wow. That sounds awful.
It is. And then there's flash loan attacks, which are really interesting. They're super complex, but basically someone borrows a huge amount of crypto for a very short period of time.
Okay.
And they use it to manipulate the market and make a quick profit.
So it's all about exploiting, like, loopholes and vulnerabilities, basically.
Exactly. It shows that while decentralization has its advantages, it also creates opportunities for people who are looking to take advantage of others.
Right, right. And then on top of all that, there's this whole question of accountability. If something does go wrong in this decentralized world, who do you turn to?
Right, that's a big one. In traditional finance, if you have a problem with your bank, there's a clear process, right? You can complain to a regulator, you have some protection.
Right, yeah.
But with DeFi, it's not so clear-cut. There's no central authority to turn to, no safety net, and that can be really scary for people who are new to this space, especially if they're not, super tech-savvy.
Yeah, yeah. So it definitely feels like a high-risk, high-reward kind of situation.
I think that's a fair assessment.
But then here's where it gets really interesting. The ESMA, they conclude that DeFi, right now at least, it's not a major threat to, like, the overall financial system. Which might seem a bit surprising given everything we've just talked about.
Totally. So, how do they explain that?
Well, it really comes down to scale.
Yeah.
Right now, DeFi is still relatively small compared to the traditional financial world.
Okay, yeah.
So it's not big enough to, like, bring down the whole system if something goes wrong. But that doesn't mean they're not paying attention. They're definitely watching closely to see how things develop. So it's not a matter of, like, if it becomes a problem, but when, maybe?
Potentially, yeah. It's a rapidly evolving space, so it's hard to predict exactly what the future holds.
So for our listener who's maybe a little overwhelmed by all this information, what's the takeaway here? Should they just steer clear of DeFi altogether?
I wouldn't say that. I think the key is to approach it with caution and, do your research. If something sounds too good to be true, it probably is.
Right, right. Don't put all your eggs in one basket.
Exactly. Start small, diversify your investments, and never, never invest more than you can afford to lose.
Solid advice. And to leave everyone with one final thought.
Right.
The ESMA report mentioned that there might be stricter regulations coming for DeFi, like around data storage and user identification.
Interesting.
So the question is, if DeFi becomes more regulated, does it lose what makes it unique? Does it become like just another part of the traditional system? Can you have both innovation and consumer protection?
That's a great question, and I don't think there's an easy answer. It's something we'll all have to grapple with as this technology continues to evolve.
Absolutely. All right, that's all the time we have for today's deep dive. Thanks for listening.